Hey guys, welcome to another video brought to you by Total Control Traders. Without further delay, let's get right into the market today. All right, first up, SPX. So we bounced overnight to the GP right before market opened. Then from there, straight downhill. Where is the market gonna go from here? All right, so this is considered a breakout fakeout. We have broken this key trend line. There's potential this inverse head and shoulders. So we broke the neckline. Depends how you draw it. There could be, if you zoom in, this could be the shoulder here, or zoom out, this could be the shoulder. So it depends how you draw it. This would be a potential neckline. Regardless, we broke the neckline. Saw some follow through. However, failed to break the GP from this drop, high of this drop to the low of this drop. Where do we hold? This previous high before that flash pullback, the ABC, okay? So we bounced, we held that. Oh no, that's the next zone down. Sorry, this was not really a major support zone. I wouldn't really say, because you see that we sort of blasted through here. However, it was just a flash back hold. So it's notable zone, but not major support. But now that we bounced from it, it's noticeable. It has now become noticeable because slight resistance, bounce, bounce. Now the third bounce. So this zone is worth noting. Now from the rejection of the GP, we came straight down, blasted through the reverse GP. So market is weak. This GP from this move up, market is weak. Depending on how you draw this trend line, I find that this is likely to be the next potential. We are seeing lower wicks forming. However, the market did close weak. Now, today was the last day, or Friday was the last day of OPEX week, the monthly option expiry, which generally, if you look over past the last 10 monthly expiry weeks, they have, I think, majority of them, 8 or 9 of them, have been bearish or sideways action. So from here, what I did during the market today was to do a deep dive while the market was open. Wanted to determine whether if we can expect a bull market, bull Monday, as we have seen majority of the times. So let's take a look. First one, VIX. Slight bounce from that 21 zone. This, we can still see that it's a notable area or a notable price of reaction. From back here, this one broke down under a little bit, but bounced. Then this rejected back here. So this 2140 is a notable price on VIX. However, based on this price action, I would expect further downside. And if we were to look at the UVXY, now this is a 2-time leverage to the VIX. We can see there's continuation on the drop side with increasing bear volume after decreasing bull volume. So this gives me, as a bull right now, a little bit more confidence. However, the other thing to note, of course, is the US dollars. On the US dollars, on the 4 hours, I am seeing a potential 4-hour head and shoulder forming. And we can see that it is forming right now. We have broken the neckline. This could be the neckline too, but from the way that this chart is reacting, I think it's safe to say that this is the neckline. So from here, we bounced up a little bit. We did get extended from the 4-hour 8, so bounced up a little bit. Bounce is weak. We are rejecting from the neckline again. This gives me a second sign of bull confidence. So even though that the SPX is weak, on the hourly, we can see just straight drop, broke through GP. Even though the SPX is weak, I have somewhat of both confidence. And since my account is in breakout, and this is now day 1, day 2 of my second year as a full-time day trader, I decided to take on a little bit more risk. Went in near full sizing. I think it was about 60-70% full sizing. And let's see how Monday opens. I am very well aware that we could very well just open bear, just gap down, open bear. And what that would do then is potentially bring my account balance to that higher low that I have set for myself. And if that is the case, then we'll be reverting back to golden setups only. However, if you watched the video yesterday, my account is right now in breakout mode. I will be taking higher risk for higher reward. The best way to describe it right now is risking it for the biscuit. I want to see that breakout. Continuation, write that momentum. Make sure my account is set starting this second year as a full-time day trader with hitting the ground running. All right, so that's the market. You know what? Let's take a look at NAS as well. So what I noticed on the NAS today was potential inverse head and shoulders that follow through, and now we are looking at a potential head and shoulders. And let's remove this. Previous high held, broke down under a little bit, depending on what time frame you're looking at. There we go. If 4 hours, we did not break down. So still gives me as a bull more confidence. Volume, not so ideal. Bull volume is nowhere to be found. No divergences. SPX, similar idea. Bull volume nowhere to be found. How does the Dow look? The same, decreasing bull volume, noticeable bear volume. So right now, overall, I would say market is still choppy. It is still uncertain. And that's the message I sent out in our trading chat group today. Even though I am going decent sizing, swinging bull positions into Monday, does not mean that you should too. Mind your account. Know where your account is. Know where your account's higher low is. My account, my personal account is in breakout mode, so I will be taking that chance. I will be taking that risk. You know, what's that? Take the risk or lose the chance, right? All right, that's it for the market. Choppy market. Let's get into the hottest tickers. First one, Bitcoin. Congrats, Bitcoin bulls. This bull divergence was a beauty. Daily bull divergence, rare sight, GP hold. This was the goal. From here, we fully bounced to that 1-to-1 extension target. From the low back here to the high, to the higher low of this GP. Full bounce to the 1-to-1 extension target, blasted through. We are now above 55 Gs. And I am seeing and anticipating a potential reaction around this zone. We are extended from the daily 8 as well. So at the very minimal, would expect coming back to touch the daily 8. Remember, doesn't hurt to take profits, especially if your target is hit. And it's always okay to buy back in higher, as long as you get that certainty that the move is continuing. Look how far extended we are on the weekly. This should give you an idea of when or where you should be taking profits. There is now a weekly bear divergence forming, as well as decreasing bull volume. So from here, of course, most ideal, we want to see another setup like this. Bull flag setup. So let's see what next week brings. Bull divergence, full anticipation of this playing out. Next is Tesla. We held that weekly 8 on decreasing bear volume. Love it. Kathy Bay's been buying, or Kathy Wood's been buying. Daily, not very noticeable. We are still trading under the daily 8. However, the break of this wedge with lack of follow through is giving bulls a little bit of confidence. Nothing exciting yet. Gonna have to watch for the volume. Next, NVIDIA. Alright, bounced from the daily 8 and the key support previous all-time high at 509 or 589.07. Now, today a little bit of rejection. We are seeing that bull flag formation. Volume decreasing, amazing. Earnings is the only concern coming up on the 24th, which is 21st, 22nd, Wednesday. Earnings on Wednesday. However, due to the sideways action that we have seen, I am fully anticipating further leg up. And as mentioned, we'll be looking at first target 666, which lines up with this trend line. Next, FSR. What a beautiful bull flag setup. Although we did drop a little bit faster than anticipated. Well, not really. 4 days. This is great. This is actually very great. We rejected from a GP. 4 days of slight drop on low bear volume after this huge bull volume spike. Full anticipation of further upside. So from here, where we'll be looking at for target wise, this one's going to be interesting. Most ideal target after the all-time high break, oh, it's already drawn, we'll be looking up at $29 to $30. The $30 psychological resistance, that would make sense after this break of this 23.63 previous all-time high. Next, QS. Similar formation, huge bull volumes, 3 days of spike, now low bear volume. Congrats to those who held QS. And I continue on holding on this QS. We'll be looking for a potential add on this touch of the daily 8. We have not even come back to backtest this key zone yet. From here, first target remains at gap fill of 84.33. Once that's broken, we'll be looking up at the GP of near 100. Lots of upside to come. We are still only trading at 62 bucks. Next, last but not least, Zoom. All right, held the 0.382, the most bullish case possible on decreasing bear volume. Key zone lost it by a little bit, but we held that 0.382. From here, on the next leg up, we'll be looking at the gap fill. Daily, we are trading under the daily 8, so that is worth noting. So it is a little bit weaker than anticipated, but if you look at this bounce back here, similar idea. Traded under the daily 8, then the next leg came up. Judging by the volume, would anticipate there is one more move to fill this gap. All right, that is it for today's video. Thank you guys for watching. Hope you guys enjoy the content. If you're looking to get out of debt or build that first pot of gold, make sure to hit the like and subscribe button in order to get notifications on our daily videos. Also, check out our website at totalcontroltraders.com. We offer a 7-day free trial to our chatting platform where trading ideas are shared and charts are reviewed live. I hope you guys stay safe and be in control. Thanks for watching, guys. I will see you in the next video.